the biggest interview of the year. Prime Minister Modi speaks to Moneycontrol. Ahead of the G20 summit, India's place in a multipolar world. The war against inflation. India's technology and human capital. A Moneycontrol mega exclusive.
Well, that's the mega Moneycontrol exclusive ahead of the G20 summit this weekend. PM Modi has told Moneycontrol that India is advancing the interests of the developing world at the G20. He adds that the democratization of the G20 presidency is India's investment in capacity building of the people, especially the youth. Well, log on to moneycontrol.com and catch that mega exclusive interview that PM Narendra Modi has given to Moneycontrol. Well, good morning and welcome to Morning Trade. It's a brand new day and lots of cues to digest when it comes to the markets. But, before we move further, let's take a look at some of the other headlines at this hour. Wall Street closes lower as trading resumes after the extended Labor Day weekend. Higher crude prices ignite fresh inflation concerns and surging treasury yields also weigh in on stocks. Meanwhile, Asian markets open largely lower with the GIFT Nifty implying a negative start for the Indian market. Russia and Saudi Arabia extend production cuts until the end of the year. Brent crude hits a 10-month high, surges above the $90 per barrel mark. RBI Governor Shaktikanta Das says vegetable price inflation will not last more than 2 months, adds the central bank remains watchful of risks from recurring food price shocks. And among stocks in focus today, Jio Financial as it exits the Nifty from tomorrow, and Vedanta will also be in focus. Well, as I was mentioning, the crude prices are above that $90 per barrel mark this morning, and that is what has led to, tepid cues coming in from Wall Street. But let's also go across to Manisha Gupta, commodities editor, CNBC TV 18, to understand where crude prices are headed from here. Good morning, Manisha. As expected, Saudi and Russia both have extended the production cuts to the to year end, right? But we've already clocked $90 per barrel mark on Brent crude prices. Would you say a retest of $100 per barrel mark is not very far away from here?
Oh, absolutely. It's not too far away from here because you know what the markets are dealing with right now is that even if India is buying less and even if the China recovery is slow, but with these kind of cuts and these kind of cuts not extended now and only until October, but until December will definitely bring some tightness into the global markets, and that has been supportive for the crude prices. The other important trend is that now crude prices have turned into correction. That means that the prices now are more expensive than what they are 2 months later. So that tells you the tightness is something that the markets have already started to factor in, and we have seen that support come in. You know, I have been talking to analysts at Citi and Saxo Bank and Rabobank, and all of them have upped their crude forecast. So Saxo Bank tells us that $94 a barrel is a possibility immediately. Probis Securities talks about $100 a barrel in the next week itself. And various banks and brokerages globally are now talking about $95 to $105 a barrel of a possibility before 2023 ends.
Right, $100 per barrel mark on Brent crude, not great news for the Indian markets, and of course even equities globally, as it would lead to risk aversion. With that, Manisha, thanks a lot for joining in this morning and sharing your thoughts with us. But let me also bring on board Shivangi Sarda of Motilal Oswal Financial Services, who's the technical expert for today on the show. Good morning, Shivangi. Great to have you on the show after a long time. First of all, I want to get in your thoughts on where the Nifty is headed from here, given the fact that we have, crossed that support zone of 19,500 and 550 or thereabouts. Even though global cues are a little subdued this morning, given the kind of momentum we've seen in the Indian markets, 3 straight days of gains coming in, do you expect the Nifty to clock that 19,600 mark today?
Good morning, Nandita. Thank you for having me. So we've seen that Nifty has been outperforming the broader market as compared to Bank Nifty, and we've seen a stellar recovery in the last three sessions. It's holding on to its support zones, and hurdles are shifting higher. So it did surpass its previous 2 weeks high zones as well. So somewhere there is strength which is likely to continue over here in this space. We are looking for 19,650 and then 19,700 levels for an immediate day point of day for Nifty. And on the support side, we could see 19,350 is a crucial support to watch out for. Now, talking about the Bank Nifty, we have the expiry today as well, and we've seen that there has been underperformance from the last 4 to 5 sessions. And over here, we've seen that. Even yesterday, it could not surpass and hold above, its crucial level of 44,750 levels. Although it is, trading near its 50-day exponential moving average, it needs to hold above it and surpass, at least 44,750 for a good up move to start in this index. So this is the level to watch out for. If it crosses this level, it could see 45,000 and then 45,250. On the flip side, support is placed at 44,250 zones. Overall, we've seen sector-specific action, and the entire mid cap rally is also mid cap stocks are also rallying. So we one could focus on them.
All right, hold that thought, Shivangi. We'll come back to you and talk about specific stocks. But let me also bring on board our next guest for today. Joining me is Feroze Azeez, who's the Deputy CEO of Anand Rathi Private Wealth. Good morning, Feroze. Great to have you on the show. Let me first get in your thoughts on where the markets are headed, given the fact that we've seen the markets regain momentum after the correction that we had seen. In fact, mid-cap, there's a party going on out there. We've seen the mid-cap index, hitting record highs day after day. Do you think mid-caps are the place to be at the current juncture vis-a-vis the large caps?
Good morning, Nandita. I think, like you rightly pointed out, the mid-cap index has done very well. The small-cap index has outperformed the mid-cap index as well. So the broader markets are getting this momentum because of the domestic flows. We've seen about 25,000 crores of inflows from the domestic institutions and about 12,000 crores of inflows in the month of August from FIIs. So the inflows, when they come from the domestic side, of course, the broader market runs. And if the inflows are from the FIIs, overweighing the domestic inflows, then Nifty outperforms. Now coming to the more important forward-looking question of what kind of outperformance is possible in these two indices relative to Nifty, to my mind, the answer is there is still a lot of steam left in these two indices to outperform over the next couple of months. But I think as the general election takes the center stage, we will have some degree of shift to Nifty because there will be some degree of risk aversion which will result in some underperformance, not in this calendar year or the last part of the calendar year. You can see underperformance of the mid-cap and small-cap because of the risk aversion and flight of capital, which will definitely be there before the general election and the uncertainty it brings in. But we have seen the last 5 general elections, 1 year, 6 months before and 6 months later. If you invested, those are opportunities rather than adversities, and people should capitalize on it. Being more stock specific is what is going to be the name of the game for small cap and mid cap because of valuations of some of the counters being astronomically high and not sustainable.
Right. Pockets that one should look at, when it comes to stock specific action. Would you say defense, manufacturing takes precedence over consumption now?
I would say I would still vote for consumer cyclicals because of the kind of per capita income increase which we've seen, and the share of wallet in terms of expenditure is going to go up. The rural demand is currently a little lackluster, but that's expected to go up. So if you make money when you're a little ahead of the curve. So consumer cyclicals outperformance is what we've been calling out for the last couple of months, and that seems to have played out. And I think that will play out for the next 6-8 months. So consumer cyclicals will be my vote. IT sector is definitely another sector which has bottomed out a month and a half back. And that's where we called out IT sector's reversal. And with some of the reports claiming that in 2024, you will have a $5 trillion expenditure, $5.1 trillion expenditure globally on IT with AI and also taking the center stage of that sector. You will have a lot of expenditure there. And of course, Europe has slowed down from discretionary expenditure perspective on the IT side, but that will certainly be behind us. So IT will be one sector. And consumer cyclicals will be the other sector which we think has the potential to outperform Nifty by about 5-6% over the next 1 year.
Right. We have, of course, seen a good resurgence in the IT sector gaining traction over the last few sessions. But let's also talk about somebody who's looking to, accumulate wealth with a time horizon of somewhere around 10 years or thereabouts. What should be the asset allocation strategy be like right now, Feroze? Equities are running up. Interest rates are here to stay higher for longer. So how much of an exposure should one have to debt funds going forward? What should the right asset allocation strategy should be at the current juncture?
It's Nandita, in my opinion, when you speak of longer periods, before we get to the asset allocation, I'd like to spend about 30-40 seconds on what are the variables which will determine your returns on different asset classes over 10-year periods. In the short term, news is going to be overwhelming, and that's going to dictate the direction of the market. And in the medium term, corporate earnings take the driver's seat. But in the long term, economy really influences what the asset returns are going to be. So I'm going to touch upon about 3-4 variables which seem very good from an economy standpoint, and that's when my asset allocation suggestion will be substantiated. If you look at the GDP growth of 7.8%, contribution from the service sector was about 10.3% growth, 6.2% growth for this financial year seems very likely, with 7.8 being clocked in the first quarter. That's point one. So GDP, a tick mark. If you look at GST collections, I've seen 11.4% increase for the first 5 months, which I think is healthy. Of course, there has been a little downtick for the last month. But I think overall, you're looking at 11.4% growth. So GST collection is a great economic data of the actual activity. That's a tick mark. If you look at the inflation, of course, has come up significantly from the 4.87 to 7.4. That's driven by the vegetable prices, and I think it'll cool off. That will not require another rate hike, which is a very important variable for the next 1-2 years. Fiscal deficit, we have only penetrated into our expenditure of 33.4% over the first 4 months. So we've not spent flamboyantly. We've been very fiscally prudent. If you look at the weighted average for the last several years, and in fact, long-term averages, 58% of the expenditure is done in the first 4 months. And this year, we are just 33%, which will mean that the borrowing in the government is going to be low, which will put some pressure on the downward side on the interest rates. That's on the fiscal deficit side. That's a tick mark. If you look at flows, that's a tick mark, which I already read out to you. Given all these variables, as long as the economy is progressing in the direction which IMF has predicted for us to be the third largest, if that were to happen, I would not say that 10 years monies need to have debt at all. A 70, 80, 90% could be equities, as long as you're able to withstand the shocks of 14-15% correction every financial year. So asset allocation for 10 years, to sum it up, I would say 80% in equity, about 10-15% in debt, not in conventional debt, because taxation is out of the window from a debt fund standpoint because of the Section 50AA inclusion. You should look at arbitrage funds for the next 2-3 years, can give you that post-tax 7% return because of the elevated interest rates. So that's the allocation. Of course, you can have, you had Manisha on the show. And she would be very upset if I don't give any allocation to gold. And she has always called out gold very beautifully. I'd say 5-7% in gold and sovereign gold bonds is something could be the allocation from a 10-year standpoint, with a standard deviation will not exceed about 11-12% if you have this kind of a composition.
All right, crucial to keep gold in your portfolio. But last question to you, Feroze. We have, in fact, we are seeing a lot of new entrants in the mutual fund space with, Jio Financial, BlackRock. You have Zerodha, AMC, Helios. So, exciting times ahead for the mutual fund space. How do you expect this landscape to change going forward?
It's the biggest and the best news possible in the mutual fund industry, because we had privatization of the mutual fund industry in 1993-94. And that really transformed the landscape. And today we are sitting at about 4 trillion rupees as our assets under management. But this is the digitization of the mutual fund industry. And if that were to happen, and if we are able to bring in 5-10 crore fresh investors, all asset management companies will benefit from it, because no new investor only invests in one AMCs. All AMCs coexist with 10-15% market share. So if Jio Financials has the power using the Aladdin platform of BlackRock to go to the nooks and corners of India, which is Bharat largely, you will have 5-7 crores addition. So whatever new investors you've added over the last couple of decades can be added in the next 3-4 years. And if somebody comes into the mutual fund spree and becomes an investor for 30-40 years, he's not going to restrict himself or herself to the AMC which brought him in. He's going to buy the largest AMC, which is SBI. He's going to buy the second largest AMC, which is HDFC, he will buy ICICI funds as well. So the biggest, this is another paradigm shift. If you look back 10 years from now, you will see this is the digitization of the asset management industry, which is the need of the hour if you have to penetrate the Indian investing landscape, which is abysmal today. We are just about 16% of our assets under management as a percentage of GDP. US is at 1.4 times their GDP as AMC size. And global average is 84%. So we are still scratching the surface, and digitization will actually bring in the fillip to get to what we deserved.
All right, exciting times lying ahead for the mutual fund space. With that, Feroze, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. It was a pleasure speaking to you.
Likewise.
Well, with that, let's go back to Shivangi, who's been waiting by very patiently. Shivangi, let me first talk to you about the stock of the day, Jio Financial. I know it's a recent listing, so not a lot of data to go back to, but the stock will be exiting the Nifty index, in fact, NSE indices from tomorrow, right? We have a query coming in from Debu K on the same stock going forward. But given the kind of movement that you have seen on the stock price, what would you say? Where would you say it's headed in the near future?
So, I mean, of course, we don't have much of data points over here to talk about. But then, if we talk about the overall stock, it comes from a strong parent, and one should, continue to keep it in the portfolio, I feel. If we talk about the immediate levels, I can see 250 as a crucial support that we saw that even on the previous session, it, bounced back after taking a support over there. And on the upside, immediately, we can see the recent high, which is, around 260, 266 zones. So one could actually watch out for these levels. And, if you talk about the long term, I think we should have it in the portfolio.
Right. That's the view coming in on Jio Financial. But let me also talk about Voltas. There is a brokerage note on this stock. This is the brokerage call of the day, by the way. I think there's a Motilal Oswal report only on Voltas, where they have reinitiated buy rating target price of 1,000 rupees per share. In fact, the brokerage expects long-term positives to outweigh near-term challenges, and it believes that lower ad sales and promotion expenses will drive margin expansion for this company as well. Over the last 6 months or so, the stock has been under pressure, but of late it has started to pick up momentum. Last 1 month, you've seen a 5% gain coming in. Do you see levels of somewhere around 950 or 980 on the charts now, Shivangi? A retest of 52-week highs anytime soon, given the fact that it is a bullish report coming in?
So we've seen that, it recently crossed its April high, which was, a consolidation zone since then. So a good momentum can be seen building up over here if we look at the monthly frame. Now, if we talk about the weekly frame, the stock has been, performing from the last 2 weeks or so. And there has been a good amount of buying interest. Volumes are increasing along with the, RSI turning into the positive trajectory. So definitely the stock is positive and looking, for 900 levels, technically immediate zones. And 850 would be an important support to watch out for.
All right, watch out for that support level then on Voltas. But let's take up some queries that are trickling in this morning. Pankaj Kajalia wants to know your thoughts on United Spirits. Now, this stock last 6 months has done fairly well, but over the last 1 month, it has just given just about 3 to 4% returns. Would you say that if somebody is invested in this counter, should they hold on to it? Or would you say that, if there's any kind of pop comes in, you kind of take profits and exit?
So, United Spirits has just been on my radar since yesterday, and we've seen that, there has been a good whole flag pattern formation, and a breakout is, expected over here. So it could, if it crosses around 1040 levels, it could see 1075 levels, which is the next targets coming out for the stock, and 1010 would be an important support to watch out for. Overall, if you talk about the, technically and data-wise, the structure of the chart is very positive, and one could wait for higher levels over here.
Right, that's the view on United Spirits. Hope that answers your query. Let's also shift focus to the fertilizer pack. Nitin Limai wants to know your thoughts on Chambal fertilizer. I think fertilizer stocks have been doing fairly okay over the last 1 month or thereabouts. The stock is still quite, far away from its 52-week highs. It's in fact just come off its 52-week lows and somewhere around 282 levels or thereabouts right now. What should one's strategy be on this stock with a short to medium term perspective?
So, talking about fertilizer and the extending it to chemical space, these two sectors are one such sectors which see a wild momentum and then they kind of consolidate for a little bit. So this is now the phase of the consolidation, but the base has been strongly created and the stock looks quite positive. So one could hold on for this for around 290 and then 300 levels positionally, and 275 would be an important support to watch out for.
All right, that's the view coming in on Chambal fertilizer. Hope that answers your query. Let's take up the next query. This one is coming in from Ashok Kandukuri. He wants to know your thoughts on HDFC AMC. This stock hasn't really been doing all that well. Last 5 sessions, it has lost somewhere around 2.5% or thereabouts. How should one trade into this now, Shivangi?
So, talking about the entire sector, this sector is kind of losing momentum as of the moment. But HDFC AMC looks quite positive because it's held on to its key exponential moving average for quite a long time, and we've seen that there has been a surge in volume and price last week, and the stock has held on to its support zones of near about 2400 levels. So the stock looks quite positive. One could, hold on to this stock, although the, speed would be a little less. 2570 is the next targets looking for this stock. 2420 would be an important support to watch out for.
All right, those are the levels to watch out for on HDFC AMC. A query coming in on IDFC First Bank. Of course, this stock has seen a great up move. Just last week we heard that GQG has bought a stake in the counter, and since the last 5 sessions, the stock has gained somewhere around 9% or thereabouts. We have a query coming in from Sai Kumari. Wants to know how to trade into this counter. What are the next targets you'll be watching out for on IDFC First Bank now, Shivangi?
So looking at both IDFC and IDFC First Bank, both the stocks are quite well right now at this juncture, and we've seen a good rally from the month of April till now. So that makes it around about 6 months of continuous up move, which is remarkable, and the stock is likely to continue this momentum even higher. So if one has these stocks, they can hold it. For IDFC First Bank specifically, the targets come out to be 103 immediately, and 97 would be a support to watch out for.
Right. Let's also talk about private banks now. Ravi Singh wants to know, your thoughts on HDFC Bank. Private banks, of course, haven't really participated, and they have been underperforming, the benchmark as well. How should one look at an HDFC Bank right now? Would you say, HDFC Bank looks more attractive compared to an ICICI Bank? And the kind of dip that we've seen in some of these private banks presents an opportunity to buy into them right now?
So private banks have not participated, yes, rightly pointed out, and we've seen that dent can be seen in banking index as well. PSUs did gain some momentum, but then the lack of the momentum in these private space is actually adding up to the lackluster movement in Bank Nifty. So talking about stock specifics in private banks, I think HDFC Bank has kind of lost its momentum, and over here a better pick would be ICICI or Axis. So one could watch out for these two stocks. We've seen wild movements in Kotak Bank as well. But then if we talk about safety, Axis or ICICI would be the preferred pick over here.
All right. ICICI, of course. ICICI, of course, will be the preferred pick. Let's take up a couple of more queries. We don't have much time, but one query coming in on Vedanta. Maheshwar Bhanu K wants to know whether there is an opportunity for fresh entry for the medium term. Metals have been on an upswing, lately, but Vedanta hasn't really participated. Would you advise investors to look at a Vedanta for the medium term, or would you say a Tata Steel looks better at the current juncture?
Now, if you look at the Vedanta chart structure, we've seen that the stock has been, in lackluster move from the last 4 5 months, and I would, suggest that there are better sectors and better stocks which are having good momentum. This stock would, however, be a bottom fishing one, so I would recommend, to stay out of it as of these levels. Once it crosses, 250 and it holds above it, then, we could take a stance over there. But of course, Tata stocks, in fact, the entire pack has been doing quite well, including Tata Steel. So definitely a slight dip over here would be a better, stock to enter into in the metal space.
All right, that's the view on the metal space. Last query for today. I want to get in your thoughts on railway stocks, the likes of IRCTC, IRFC. IRFC, I think over the last few days has gained somewhere around 40% or thereabouts. After the kind of run-up, how should one play railway stocks?
So, IRFC has been one stock which has moved out of the league altogether. Talking about the entire railway space, we've seen that there has been lackluster movement in IRCTC, RBNL, and all these, stocks. But we've seen good momentum in the IRFC. Now, if we talk about the levels, the stock looks quite positive. There has been slight, profit booking, but this overall the stock looks quite positive. The next levels which are coming out to be 75 and 71 would be a support to watch out for. And one could also participate in other railway counters which are looking quite positive.
All right, that's the view on the railway space then. But with that, we are completely timed out. So this wraps up our query segment. But Shivangi, any stock recommendations for our viewers this morning?
So, stock specific wise, I'm liking Deepak Nitrate. This is one stock which plays out very well in the September series, and we've seen that the stock has surpassed its previous hurdles of 2280 zones and holding quite well. So the stock is kind of gaining momentum, and we could see a good potential upside over here. So recommending a buy here with a target near 2370 levels and a stop near 2235 zones. Now, my second pick would be from the pharma space. We've seen quite a lot of attraction over here as well. In fact, Apollo Hospital, Lupin, and all these stocks, are looking quite positive. So my preferred pick over here would be Lupin. We've seen that the stock has consolidated for a very long time, and the good part is that there has been, buying at any small declines. So this makes a very good base formation over here and could take the stock higher to 1160 zones, which is the next target coming out for the stock, and 1100 would be an important support to watch out for.
All right, Deepak Nitrite and Lupin, two stock recommendations coming in from Shivangi this morning. With that, Shivangi, as always, it was a pleasure speaking to you. Thanks a lot for taking out time and, of course, addressing all of your queries as well. Well, with that, we've come to the end of this edition of Morning Trade, completely timed out. But before I go, of course, it's a mega money control exclusive. PM Modi has spoken to us on a host of issues, including G20, the economy, and, the global challenges as well. But we leave you with some excerpts on what the PM had to say to us. Of course, you can catch the full interview on our website, moneycontrol.com.
the biggest interview of the year. Prime Minister Modi speaks to Moneycontrol. Ahead of the G20 summit, India's place in a multipolar world. The war against inflation. India's technology and human capital. A Moneycontrol mega exclusive.